Boy, that time just flies right by, doesn't it? Man, that weekend just zipped right past us. That's all right, though. Back to the action here tonight. We've got a brand new week, brand new month, and lots of great opportunities on the horizon for this first week of June. Speaking of first week of June, it's Monday evening after all. It's June the 1st, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job in the video tonight is to help us find the best entry setups for tomorrow's trading session. And I got a jam-packed video in store tonight. The charts are already in the background. As you can see, we got some S&P, of course, got the oil, and of course that yellow metal, the gold futures. A lot of nice big spike and range patterns. Lots of easy setups I can see looking on the horizon. We'll talk about all my favorite trades and potential traps to avoid in tonight's video. Before we jump in though and put all the charts, all the setups together for tomorrow, I just want to remind you guys to make sure you subscribe to our YouTube channel. I don't want you to miss all the good stuff we publish every evening on this video. Don't forget, if you have any questions about anything we cover in the video tonight, drop those questions in the comment section below. And as always, I love it when you guys tune in every evening. If you tune in every evening, if you rely on this newsletter to get your mind right and get your charts right for the following day, hit that thumbs up button for me. I really appreciate you tuning in, subscribing, supporting the channel by posting comments, and hitting that thumbs up button if you guys like the video every evening. All right, but enough of the introduction. It feels great to be back here after a weekend away. Excited to get back with our hands dirty again tonight on the video. Let's start the session off tonight, though, with the calendar for tomorrow. It's the first week of June. Get some big news. I want to make sure you know what to be ready for here tomorrow. Tomorrow, of course, is June the 2nd as we break into this brand new week, brand new month of June. June is a quad witching month, don't forget. So the third week of the month of June, 1, 2, and 3, right? That third week of June is that quadruple witching. That means more volatility, a lot more rangy, grindy price action. We'll talk a lot more about that as we get closer to that third Friday of the month. But June is always a very interesting time of the year, right? It's kind of that right before the summer, right after the spring. We'll talk a lot more about quad witching and what goes into that as we get closer on down the road here. But looking at this week in front of us, it's the first week of the month. And so we know anytime we have the first week of the month, we always know one thing: jobs, right? Friday morning, the biggest news of the week is on Friday. It is the employment number, that 8:30 a.m. Eastern Time employment situation number, also called the non-farm payrolls. Now, on Thursday this week, we got the ECB, another announcement coming out of the ECB. We'll hear from the ECB on Thursday. That's going to be the big news on Thursday morning. Got jobs on Thursday as well. Wednesday is a really busy day. We've got factory orders. We get an ISM number on Wednesday, and Tuesday, I'll tell you, tomorrow is kind of the lonely day on the block here this week. It's a wide open day tomorrow, of course. You know, we're out of the woods here on Monday. There's not a lot on the schedule here for tomorrow. Anytime I don't see a lot on the schedule, I always know usually the best setups be somewhere between 9:30 and 11 o'clock Eastern Time. So that's kind of going through my mind here for tomorrow. We also know there's a lot of stuff happening out there, right? You know, a lot of tensions going on around the world right now, especially between the U.S. and China. We heard today how there was a delay in some of the agricultural purchases from the Phase 1 trade deal we've all forgotten about that happened only a few months ago. So tensions, of course, between the U.S. and China, that continues, right, to be on the forefront here, in addition to the violence that, of course, that has erupted over the weekend, which hopefully will come under control here sooner rather than later. We continue to see reopening around the world, right? All the big economies right now reopening. It doesn't seem like there's been any big hiccups here. Barbershops and nail salons are opening back up here in Los Angeles, so things are starting to get back to normal. That, I would assume, is going to be a boon for things like oil, right, as we go forward, the reopening, of course. There's definitely a lot of things that are happening out there, kind of bubbling up under the surface. I think everybody's really a bit nervous right now to see how this is going to keep developing in the U.S. and China. The markets have very much shrugged this tension off over the past few weeks. We've talked about that extensively on this newsletter. But there has to be a law of diminishing returns here, right? At some point, the reopening of the economy will not be enough to keep these markets propped up. And we're going to start to come into probably some sort of headwinds as we go higher. We'll talk more about that obviously tomorrow morning in our trade room. But really, that's what's on our mind here for tomorrow. There's not a lot on the schedule here for tomorrow. Will we hear some more regarding the U.S. and China back and forth? Will we see any more developments regarding the reopening of the economy? Will the kind of the unrest here in the U.S., will that develop any more? It's unlikely, but that is definitely something we are watching that doesn't exactly have direct ties to the markets, but we will see if the markets do respond, right, because of those headlines. So no major news tomorrow. We're pretty much coming in tomorrow. We'll prep our charts. Again, anytime there's no major news, I'm always thinking 9:30 to 11 o'clock is usually where you want to be at your desk tomorrow. So, of course, make sure you're there with us, right, tomorrow morning. And don't forget, every morning, 8 o'clock Eastern Time, we get together and we trade this stuff together. That way you don't have to do this on your own. You can grab your charts, I'll have my charts, and we can trade this stuff together. It's so much easier when you're right there doing it with me. I'll put all the registration information so you can come out and join me every morning in the trade room. I'll put all that info for you down in the description of this YouTube video. If you're on the blog at Sideways Markets, I'll put a big button below this video tonight on the trading blog. Later on this week though, right, ISM, jobs, right, and of course employment number on Friday. No shortage of big news. So that's what's looking good down the pipe here. Let's get some charts ready to go though, shall we? We got some S&P, got the oil, and of course we got the gold on the video tonight. Lots of spike and range patterns, right? Lots of spike and range patterns. You're going to see a lot of this tonight on the video. We saw last Friday, there was a lot of movement higher, and then of course we came into the market today with a lot of ranges on the screen here. And for the most part, everything's bullish for the most part right now, and we're all kind of going sideways here, right? S&P not as pretty as oil and the gold, but this is the overall situation right now. It's an overall bull market into a trading range. Whenever you think about these bull markets going into a range here, you want to try to find key levels of support down here and get long underneath those lows. That's the key. You want to find some sort of support level to kind of latch onto down here. And what I do is I try to wait for those breakouts, right? So I'll try to find a level of support down here. We'll talk about this more as we go, but find that level of support. That's usually going to be the most important part of a range. Buying underneath that trading range, find that key level of support there, right? And then simply wait, right? Wait for the market to come below the range, wait for those bears trying to sell the breakout pullback and buy right, into those stop losses. A very, very simple strategy on a lot of what we're seeing right now across all of our favorite markets. Now, another thing you want to think about too is if the market breaks out, right? If we see a breakout, you'll see a lot of head fakes in range bound markets. A lot of times the market will go up and come right back down again. So you can't try to kind of predict that breakout. You really want to wait for really what I call a 1 2 3 breakout pattern, and then look for those new channels that follow through. So this will make our job pretty easy. Now that you kind of know the basics of this. Again, I think the most important thing we'll find tonight is we'll find those areas of support down here that are really going to be important to latch on to for tomorrow, and then ultimately staying patient, right, to see if we can get those breakouts going higher, and then we can start thinking about, right, taking that next pullback off of those channels. So that's going to be the main theme here of this video tonight. The newsletter is a lot of spike and ranges. Now, like I said earlier, the S&P is probably the ugliest of all of the group right now. You could definitely tell we are moving from left to right, right? We're going higher as we go left to right. The bulls certainly have control right now. I think what's going on right now, though, is we had that spike in range on Friday afternoon, if you recall, that kind of late session short covering rally. That went into a range. They finished off that move higher, and it was so low volume, right, at the end of the day on Friday. What happened, obviously, you can see here, it got knocked down pretty good with that big gap down at the open. And then buyers just simply had one thing on their mind all morning today, and that was to go right back up and fill that gap, these weekend gaps. And you can see they got their mission accomplished. So at this point now, it almost looks like one of those big kind of bullish triangles, right? Where it's almost like those big what do they call them? Inverted triangles. You know what I mean? Where you got that top here, you've got that, obviously, that triangle there. And we're just trying to find, as I mentioned earlier, we're trying to find some level of support that I can latch onto down here that will give me something I can work with. And that's where I've got my battle zone drawn in here for tonight. I really, if I had it my way, I would get something just underneath this 30-39 area. Nice deep pullback, a seller failure down here, and snap right back up to retest the high. There's also these, I didn't want to overcomplicate the chart tonight. There's also like a trend line, right, that may be coming down there as well that can also be used as a key level of support. So if I had to guess right now, that's where the best setup is going to come from. Again, it's like a bull. Again, it's a range up here, right? It's kind of a bullish. It's a triangle. Triangles are ranges. And so we want to find that key level of support. We want to latch on to that area of support and really try to wait patiently to buy that here tomorrow. If we try to go higher here on the S&P, if we try to go higher, we've got to be aware of our surroundings. We've got that 3065 level. That's a major top as we go higher. Now, I talked about this last week. There's a lot of open space overhead before we get up to that next level of resistance, right? 3100, you could easily see is a big juicy magnet for those buyers. If we do break higher, though, I've got a key target area. We're in that 3090, 3095 area as we go higher here. So, as I mentioned earlier, it really boils down to, we have our key level of support. I'd like to see this market pull back here for me, get off these highs, because like I mentioned earlier, it was pretty obvious this morning when we saw the market grinding higher like this. It was pretty clear they were trying to go fill that weekend gap. And by the way, guys, when I say weekend gap, what a weekend gap is, they're pretty much the only gaps I pay attention to on these tick charts. Keep in mind, you could manipulate these charts to give you a lot of gaps, right? These old, regular trading hour sessions. But to make it simple though, a weekend gap is simply when there's a difference between the closing price on Friday, which is of course at 5 o'clock on Friday, and the opening price on that Sunday evening. You've got to remember, the markets are open almost 24 hours a day, right? They close at 5 p.m. and they reopen, this of course 5 p.m. on Friday, they reopen at 6 p.m. on Sunday, right? So they're closed Friday night, Saturday, Sunday until 6 o'clock Eastern time, they open back up. And I know it seems backwards, right? Closing at 5 and opening at 6, but that's the way the markets work, right? They close at 5 on Friday, they go all the way through and open back up, right, at 6 p.m. The following evening. So that's where the weekend gap comes from, and those are pretty powerful. In fact, I'm going to leave that gap on there. Don't be surprised if that gap at 57 and a quarter, don't be surprised if that gap is a magnet for us for the rest of this week. We oftentimes see these weekend gaps become very sticky magnets. So we know the bulls have control. We know momentum is bullish. We want to find the level of support. We've done a pretty good job on that. We know where that is already. We get a bunch of areas down here I'd like to be looking for. If we get a pullback right now, right? If I can get a pullback as we go lower, there are really two key setups I'm watching for right now. One of them is my favorite, and that is a seller failure. As we get that pullback to pull back into that support area, I'm hoping that we see sellers come in, try to get short on the next pullback. And once they do, now we know where their stops are. And once we know where stops are, we can buy right into those stops, because that's where those bears are going to have pain, right? That's where those bears become buyers ultimately, right? So I can identify where those stops are. I'm always trying to tell my clients, anticipate. If I realize we want to be a buyer, but what if you didn't want to be a buyer? What if for some reason you wanted to be a seller on this? You would sell that pullback, your stop would go right above that high, and we can then literally buy right into those stop losses. Now, once we get those stops run, don't chase after it. Now that moving average comes over, and oftentimes they'll pull right back, right, to that moving average. And this is one of my favorite combination setups. It's a seller failure pattern, the first one, right? Seller failure. And again, it'll look a lot like this right there, right? Seller failure, into bullish pullback, right? So they go underneath, seller failure, pops up, right? Bullish pullback from there. That's the same basic idea of what we're looking for on that next pullback, and of course the retest of the high from there. So that should be a pretty easy setup to find. Now on that, right, on that same note here, if we don't get that pullback, right? If the market just kind of goes sideways up here, not much changes. So if we just keep going sideways up here, the market keeps going sideways, not much changes here. Again, we got that bull market into a trading range. I'm going to try my best now, and of course, right, we'll want to latch onto, like I said, wherever those levels of support are. So if we start going sideways here, if we start going sideways here, I'm going to mark up some support trend lines down here, find my support levels back here, and really try to focus on waiting for that break underneath the range, get down around these support levels, right? Again, I've got a couple levels I'm watching here, right, that you can easily add on your chart as well. I want to keep it as simple as I could tonight for you. So you can definitely see there's plenty of support down there. I'd like to get that, again, that moving average coming down, bears try, they fail, and we're buying back up from there. So if we do see a range market here going sideways, that does not mean it's time to trade short. It just means it's time to wait patiently, wait for the pullback, and go from there. The hardest part, I think, is going to be if we go higher. Because if we go higher here, you've got that 30.65 level overhead we talked about earlier. That's going to probably be the most challenging part. So on that one, remember, you've got to really wait for that proof. There are two types of patterns I always look for on a breakout. My two favorite breakout patterns. My first one is the 1 2 3 breakout, where first we see a strong move up, second we see a pullback to the moving average. Now at this point, this is where you can't buy that pullback, unfortunately, right? It's a lot like buying this one right here. Right? Buying that pullback is like buying this pullback. You're asking for trouble because you're buying a pullback, which is great, but you're buying it in the wrong location. So if we go up, right, strong move up here, moving average comes up, of course, that's not the pullback I want. That's going to be a very unreliable pullback here. You'll see more losses than winners on those pullbacks. But what I want to see, though, is if I can get this thing to jump off the moving average. Now we're good to go. And I get it. It's too bad you can't really predict that. It's part of business. It's part of the business. You can't really predict it. You know, like a lot of things in life, you can't predict. You got to use what you do have to work with, and that is once you get that next leg, now let's grab that, right? Grab that high. I always like to look for those hidden channels coming off those big highs and then plot my entry off the low of that new hidden channel. So it's a 1 2 3 breakout into a hidden channel pullback, right? 1 2 3 breakout. Okay, that's the pattern that confirms the breakout. And then it's a hidden channel pullback from there. Now, sometimes we don't get that pullback, okay? Sometimes we don't even get that pullback. Sometimes the market just rips and keeps going. If that's the case, I look for what I call a two-try trap pattern. Now, two-try trap patterns are really easy patterns to find, but you just got to stay patient for them, because what's going to happen is, as I always kind of kid around with you guys, I almost call this a Fomo pattern, because that's what it really is. It is a fear of missing out pattern. In other words, when you see this market, when you see the thing break higher like this, right? When it really jumps up like this, it's very tempting to want to get in aggressively on that first pullback, right? That's where the FOMO kicks in. But a lot of times you're buying so high that nobody else wants to buy up there. It's just rookies that are chasing after it, right? Because professionals, we assume, have already overcome the challenges of chasing the markets, right? That's what makes them professionals, right? You're not in the business for 30 years as a professional and you still have a tendency to overtrade, right? Those don't go hand in hand. It's like a pro baseball player who can't lay off the high fastball. They usually get weeded out in the minor leagues, right? So anyways, the bottom line is I don't want to buy that first pullback, right? It's usually a very shallow pullback. It'll be in a faster time frame. What I want is once those rookies have committed, once they've gotten into aggressively and they kind of run out of gas up there, the market pulls back and the pros are waiting right below that low. Because what happens is when the rookies realize they're wrong and they get stopped out, a lot of them will reverse positions. I made that mistake a lot when I was a rookie. And then once they get that strong run again, those same rookies that reversed their positions or went flat, they're going to start to jump back in and chase after it. Right? It's a vicious cycle, and you probably have been through it before, right? You jump in too early, you get bounced out, I'll show you, right? You take revenge in the trade, and before you know it, you've got back-to-back losses, and you've missed the good move of the move. This is everything good, right, that comes out of learning that valuable lesson. It's called a two-try trap pattern. We do a lot of these in our trade room. And remember, too, I always like to look for those additional levels of support, right? So try to find, as always, right? I'm always trying to combine some additional level of support to this so I can get long off a support level in addition to that trap. So those are my goals here for tomorrow, right? I'd like to buy this pullback. Now, speaking of that pullback, there is a chance here this market may reverse. What would a reversal look like? It's the same basic idea here, right? You'll notice I haven't talked much about being a seller. To be a seller on this market, I would first require a strong move down. I would need a pullback to the moving average. And just like a 1-2-3 breakout, I would want a 1-2-3 reversal. Now, if I can get those bears to jump off the moving average now we're good to go. But remember, I cannot just try to sell that first pullback because unless you haven't been following along, you don't want to go against that trend. So as we pull back on this, no, I'm not interested in selling that first pullback. That's unreliable, as you can see, right, in previous pullbacks here. I'm going to wait for them to actually hold that pullback, then grab that low. I like to go after those hidden channels off the highs. Those are usually where you'll find the best entry locations and then hit it. I always like to wait for that 1-2-3 reversal and then into that first test, right, of that hidden channel pullback. Target at that point now is all the way back down to retest that low. So at this point, we got a pretty good plan for tomorrow. The S&P was a bit choppy today. We got a pretty good high hopes, though, for tomorrow's trading session. And don't forget, we're going to trade these failures and pullbacks and traps and breakouts. We'll trade this stuff together tomorrow morning at the opening bell. And which reminds me, if you're not with me tomorrow and doing it with me, the next best thing is to grab our free trading classes. I'll put a link for you in the upper right hand corner. The little button will pop up there for you guys. Grab that link, pause the video if you need to, grab that link, get registered as a brand new member for our free trading classes. You're going to love it. I teach my 4 favorite entry patterns, my 3-step strategy, all the same stuff we do together every morning in our trade room. I'll even send you an invite on a free pass to come out and join us as part of that free course. So grab that free course link in the upper right hand corner. And as I mentioned earlier, right, I'll put all the trade room stuff, all the free course stuff. I'll put all the links in the description of this YouTube video or right below the video tonight on the trading blog. All right, we're looking good there on the E-mini S&P. S&P is looking ripe for the pickings here tomorrow. How about some oil? Oil is a lot easier to digest, as you can see, and so is gold, than the S&P 500. S&P pretty ugly there, and I think it's a lot to do with the fact that we had that big weekend gap to deal with there. What do we know about the oil? We know the oil is a pretty familiar sight, right? We get a big, strong bull move up. We can easily see that range that began last Friday and kind of bled into Sunday evening into Monday. As I mentioned before, it's a good idea to find a level of support underneath those ranges, right? Remember I said earlier, when you get a bull market into a range, find those key areas of support to latch onto and wait for the market, right, to come down, try to get short and buy back up now into that trading range. Now, there was a couple different ways in which you could do that. One, of course, was a nested failure coming off of that low. The other, when they made that big roll over, was another failure pattern after they rolled over. So again, the goal is pretty simple. Buy underneath that range, anchoring those entries around key support levels below it. Now you can see where we are. We're right back into that range now. And this, of course, is the no trade zone. It's important to remember that ranges are balanced, right? So this range right in the middle here, this is going to act as a magnet. What goes down will almost always come back up, and what goes up may not keep going up, right? It may come right back down again. Now, this is a very bull market, obviously, so we talked about earlier how there is some fundamental stuff going on with oil right now because, as you may recall, we're reopening the U.S. economy. I'm sure things are getting back to normal even outside the U.S. right now. Everybody's getting back to life. They're gassing up their cars, right? They're going back to the factories, and all that stuff requires oil. So there kind of is this bullish drag to it right now on the oil market, right, that we definitely are anticipating more of, at least until we get back to that level we were before this pandemic hit, which is around that, low 50s, mid 40s to low 50s area. So there definitely is some more space to go here. Pretty easy plan of attack, right? We want to buy underneath this trading range. I've got my buy zones down here. What I'd like to do is get down underneath that range here and get long from there. If we do push higher here, I'm taking the amount of the move underneath the range and projecting it up overhead. And that's going to be a pretty important level of resistance because that's going to tell me now where I've got to get through if I want to be trading breakouts. We'll also talk about potential for a short off the high here as well, which may be in store here for tomorrow. So, same basic idea here as we just talked about on the S&P, right? I'd like to get down inside these buy areas here. And again, you could probably draw a trend line across and use that trend line as well. But really what I care about right now is I want to get down in this 34.75 to 34.50 area there. Get down underneath that trading range. Let those breakout sellers come in and try to get short on the pullback. At that point, we know exactly where their stops are, and we can literally target buying right into those stop losses. That's one of the easiest ways to make a buck in a range-bound market. The hardest part about range-bound markets is just simply sitting there patiently when we're grinding around in the middle of that range, and that may definitely be the case here, right, for tomorrow. We may end up doing a little bit of sideways chop here as the market waits for more updates, regarding all the things we talked about in the beginning here. So again, I'd like to get a pullback, right? Now, keep in mind on this pullback here, we've got that low down here. So it's important to keep in mind that the size of the move or the pullback will be a big clue on this. For example, let's say, we pull back to the low of this kind of channel I've got drawn in. I have a very hard time buying that shallow pullback because it's going to put me right inside the range. What would be the safest way to buy if I'm just underneath a range like this? Remember, I don't want to buy inside the range. I would use what's called a trap pattern. I would wait for one, I would wait for two, and I'd buy a trap. So one very reliable setup to avoid buying inside the range is to wait for a trap. And those traps will help me avoid buying too high ultimately, right? And so buying high as it goes higher, right? We're going to avoid the middle of that range. If we get a shallow pullback, that is a setup I'm watching. Kind of a trap setup as we go. If we get, just kind of your marginal pullback here, right? Don't be afraid to use the underbelly of this channel for bears coming in, selling off the moving average. We're buying into those stop losses. One thing we saw today in the trade room was a very strong move down. It was a very strong move down right at the open, if you recall. So if they really rocket this thing lower here, and I could easily see it happening, right? They want to take out those lows here. If they really race down to retest those lows, think about now. Now I have a great risk-reward ratio now, but now that momentum is too strong. And so at this point now we start looking for those nested failures, right? Those one tries, those two tries. I always like to grab a trend line and put it over those lows here and use that trend line as a key area of support, right? That is one of my favorite ways to trade a range whenever we see a really deep pullback, right? So as you can see, those were three types of pullbacks there. One was a shallow pullback, one was kind of a moderate pullback, and one of them is a very strong pullback. All three of them have a way to be traded, but all three of them have a slightly different setup because of the conditions, either not enough space or too much momentum. Does that make sense? Right? How about a thumbs up on that? Give me a thumbs up if it makes sense. If it doesn't make sense, though, if that idea here, 3 different pullbacks, different momentums, different locations. If you have any questions about that, let me know, right? Let me know in the comments section and just say, go back over how momentum and space plays out in those ranges. This is a really important part of a range bound strategy because you want to make sure you're ready for everything. If we do pull back and go sideways here, just kind of hang out. Well, again, the hardest part is sitting right in the middle there. But, rest assured, though, we will not give up on this market. If it goes sideways, I'm still waiting for that move lower. I'm still waiting for those same setups that we had before. So be aware of that. If it goes sideways, don't let your guard down. Stay on the hunt and keep waiting for those buyers, right, to come in and buy it as it goes lower. The hard part here is going to be the highs, right, as we go higher, because I've got the retest the major high at 35.90. Then you get the pendulum swing. Right now, as we go higher here, it will be easy for me, as long as I can get above these highs, to start waiting for a crown reversal. And that will be a 1 try for the buyers, a 2 try for the buyers, and start looking for a crown reversal. That would be the most reliable way for me to sell short off of these highs. Because after all, it's a range. Ranges are balanced. Buy low, sell high, right? Selling high is part of a range. But with this momentum being so strong, you just got to be careful, right? Just got to be careful, selling against that momentum. And so this is a really common reversal pattern. It's probably my favorite reversal pattern, right, that we use in the trade room. It's called a crown reversal. It's basically a nested failure there. The key here is you want to, A, have it at a major turning point. That is must. And then B, you got to get that trap. You got to get that trap, because that trap is where those buyers, right, are not going to be. Well, you'll see buyers buying up there, but there'll be rookie buyers up there, right? Pros are buying down here. And so if you want to get short, you don't want to be selling when the pros are buying, right? They got big accounts. They'll knock you out pretty quickly with our small stops, right? We've got to take protection against those pros buying the pullbacks, and we got to sell up nice and high, right? Want to sell high and buy low. That crown reversal. Now, like I said earlier, right, there's a lot of bullish momentum in this market right now because of the reopening of the economy. So those 2 patterns I mentioned before, we go up, we pull back, right? We go higher with that 1, 2, 3 breakout. Again, I'm not trying to buy the first pullback, but I will definitely get aggressive, though, on that first touch of the retest of that channel, right? We call those 1, 2, 3 breakouts, right? 1 strong move up, 2 pull back, and 3 strong move off the moving average. Then I can be a buyer off the low of that channel. Or maybe it doesn't pull back. Maybe it just starts ripping higher here. If it does really race higher, don't worry about this trend line. That's not going to be enough to stop it. If we do get a strong jump higher here, watch the pullback. Because if it pulls back shallow and then makes that higher high, that's usually the giveaway. It's a strong move up. It's a shallow pullback. It's the higher high. Again, what I really should call these are the Fomo breakout trades, because that's all this really is, right? It's people who don't want to wait for the proper entry. They're buying that aggressive pullback. There are going to be a lot of reliable buyers waiting right below that swing here, right? So strong move up, shallow pullback, higher high. That's the giveaway, right? Higher high, and then hit it when you get that pullback. There are a lot of other patterns we may look for, like spike and channel patterns or flag patterns on the breakout here, but I'll go over more details on all the other variables that may come up. There's always potential for other variations of this, and we can talk more about that as we get in the trade room tomorrow morning at 8 o'clock Eastern time. Last but not least, how do we reverse? A reversal, strong move down, pull back to the moving average, right? And then jump off the moving average. No, a strong move down is not enough. It's not enough, right? Remember, there's a range here, and that range is a magnet. I'm looking to buy that move lower. And the stronger the move down, the better as far as I'm concerned. But once they hold that pullback, now we'll go off those lows. And again, if possible, I like to grab those big highs and get that big high up there. That is usually where that is usually where you're going to find the real nice sweet spot there for that sell as we go lower, right? So where's my final target there? Well, I'll tell you, there's a lot of open space down there if these bears can get back in control here. That $33 a barrel area comes to mind. We spent a lot of time chopping around there last week. So $33 a barrel. Easy objective here for those bears if they can take control of this. And I'll tell you, there's a lot of open space up there, right? Big round number at $40 a barrel, right? You have to think that buyers have their eyes on those next round of big round numbers. We've come off of 30. You got to think that 35 now we're holding. You got to be thinking they're going to start shifting their focus up to that 40 big round number from there. Obviously, we're not there yet, but at least now we have a good plan and a good idea of how to trade this stuff, even if it does start to keep pushing higher here in the overnight. Last but not least here, right? Last but not least, let's wrap things up on the gold. And by the way, if you are still here right now, congratulations on being part of the 1% group. Not many folks watch these lessons all the way to the end. I know we're all busy, so I really appreciate you guys being here right now. If you're still watching, hashtag 1%, right? Hashtag finish strong in the comment section below. It is great to have you here with me still on the video. Wrapping up though on the gold, the yellow metal here tonight, same kind of thing, right? Same kind of thing. We can easily see we have a bull market. We can easily see, and this is where there may be some more coming tomorrow. It's a little bit difficult. You'll notice I've done my best to find this range. It looks like that's going to be your range right now. And of course, with that bull bias, my job here is to anchor on those swings, right? Anchor on those areas of support. And you can see exactly why I said that at the beginning, right? You really want to focus your energy in a bull market like this on those edges, find those levels, and really try to focus on buying off of those levels. And you can see what happened, right? The market makes a nosedive. The bears, for whatever reason, they don't think it's a range. It's not a reversal, that's for sure. If it was a reversal, they would have held that pullback and jumped off the moving average. It's not a reversal. Clearly is, right, a range. They try to sell it, and we all know how this story goes, right? The bears, they try, they fail, and we get dragged back up into that trading range. So it's very similar. We've already talked about here so many times already. So we want to buy low. We want to sell high. We want to avoid the middle. One thing I like about this gold chart, though, is the fact that they've got these, right, we've got these trend lines on here. And these are really pretty important because these will help me to find additional support levels. And if we keep going higher, we pretty much know exactly where these bulls are trying to go right now, right? So that's a really important part of this as well. This is one thing we didn't have the luxury on the S&P and the oil. So we do have that luxury here. You'll also notice there is a weekend gap in there. And that weekend gap, that sneaky little bugger, right? That's the closing price on Friday, recall, right? And see what happens? They love to come back to those weekend gaps. I'm going to leave that weekend gap there all week. And don't be surprised if that 43 even area continues to drag this price back down or back up later on this week. You may also notice too, I've got this trend line here drawn up, right? Combine that over here now, and you'll see that takes us up to the measured move. So we got a pretty good idea of where these buyers want to go. The bears would love to get back down to those lows here we came from last week, but looks to me like right now, and seeing the headlines we're seeing right now in the newspaper with all the unrest and blah, 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 it does seem like there might be a bit more fundamentally bullish people out there on gold than anything else. So we're bullish technically here tonight. I want to be a buyer, as always, underneath this range. If I see a relatively shallow pullback, I'm looking for that seller failure pattern into a bullish pullback combination. Just stay away from the middle of that trading range. Seller failure, bullish pullback from there. If it really tanks, right, and dumps back down, tries to take out these lows, there's potential there might be another trend line down there. Keep in mind, right? So don't go selling it short just yet. Keep your eyes open on those nested failure. Remember that one, right? 1, 2, grab that trend line. This is one of my favorites. Whenever we see a real strong breakdown like that, let them try once, let them try twice, wait patiently for that trend line and hit it back up into that range. And keep in mind too, if we go sideways here, right? We go sideways inside the range. We don't do nothing, right? We sit right there on hands. It's the hardest part of range-bound markets. Wait for the pullback, right? Wait for those bears to foolishly try to trade the breakout pullback like they did back here, and we're buying right into those stop losses. As we go higher here, there's just enough room on this chart. It's just enough room overhead here to get yourself in trouble, in my opinion. Now, one pattern you could use on this, as we go up to that high, as we go up to finish off the pendulum swing, remember, the amount of the move underneath the range is the amount of the move above the range. So I've got my eyes on that 1766.5 area. I think the only pattern we're going to be able to use is that two-try trap pattern. And that's going to be a bit of a thread the needle situation, isn't it? We're going to have to see that strong move up. We're going to have to see now a shallow pullback, a higher high, and it will be a pretty aggressive trade here. So make sure you've got a lot of good momentum, right, on that move going higher. And again, I'm not buying the pullback. I'm waiting for that shallow pullback. It takes some time to wait for it, but I'll tell you, you'll be rewarded. Your patience will be rewarded. And don't forget to go out and look, right? Look to see if you can grab those hidden channels, because that will always be an easy way to increase your odds of success. I don't think we're going to be able to get in before we get that 1 2 3 breakout, right? Strong move up, pull back. That's the problem, right? That's the big problem right now. If we end up with a 1 2 3 breakout here, I don't like the idea of being a buyer on that pullback. What I'd like to do is I'd like to see it go right on through it, right? I mean, that would be the ideal, right? We jump up, we pull back, and the market says, we're out of here, right? We're not worried about this pendulum swing. We don't care about these major highs back here, right? We're getting out of here, and we're going up to that measured move that I talked about earlier. If they can really show me some strength up here, now I can get down with that. Now I can mark up that high, mark up that hidden channel. And again, this is one of those kind of hurry up and then get aggressive, right? We don't want to trade that first pullback, because again, that first pullback, I don't care how convincing the breakout is, it's not a very reliable trade. I'm going to wait and buy that next pullback now, assuming, of course, like I mentioned earlier, that we've cleared through some of that big hurdle here overhead. So don't get too aggressive buying high out there. Again, if I had to guess, I would guess that two-try trap pattern on strength would probably be your best option here as we make a run higher. What I'd like to do is see us dig down in, get some failures, and then snap right back higher here. And again, as I always remind you guys, right, if I want to be a seller, I can try to pick the tops and pick bottoms to call, reversals, but I'd rather wait for a move down, a pull back, right, and a jump off the moving average, break free of that range, reverse the momentum direction, find that low, mark that high, and we'll sell off the high of that channel, right? 1 2 3 breakout into hidden channel pullback. So I know a lot of this is repeating myself here tonight, but I think it's I'll tell you right now, it's a very important lesson to learn how to trade these bull markets into a trading range. Follow that momentum, buy underneath the range, latch on to those levels of support, right? Really find those levels of support and really anchor off of those levels of support. That's going to be a huge improvement in the overall reliability of your entries. And of course, don't forget, the easiest way to do this is to come out and join me tomorrow morning, and we can do it all together, because we get together every day and we trade this stuff together. It's so much easier to learn and earn while you're doing it right there with me every morning in the trade room. The best part is getting registered is very, very easy. I'll put all of the membership information for you right in the description of this YouTube video. Don't forget to make sure you call me in the office if you have any questions about getting registered. I'll be here for the rest of the evening tonight. Don't be afraid to use that live support tool on the right-hand side of the website. And as always, if you haven't done so yet, make sure you grab the free trading classes. Okay, I want you to learn this 3-step strategy. It's the same strategy we use on the newsletter, in our trade room. We've been using it for over 10 years in our trade room here at School of Trade. It's all included. Our free trading class is part of our free trial. You'll love the free course. You'll love the free trial. Grab that on the website here at schoolovtrade.com, or again, all the links you need are in the description of this YouTube video. That's all from me tonight, though. Hope you guys had a great weekend. It feels great to be back here with you all on this first week of June. The weather is starting to feel a little more summery here in Los Angeles. Hope you guys are having a great day out there so far. I hope I'll see you tomorrow morning at the opening bell. If not, come back and see me again tomorrow night for the next edition of this nightly newsletter. My name is Joseph, as always, and be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.